What up, Facebook, YouTube? How you doing? I am here again once more. It is September 15th. We've just been through a Category 1 Hurricane Nicholas that turned into a tropical storm. But you are here with us today, and this is your live real estate talk show. I bring you every Wednesday at noon, and I try to bring an opportunity for you to tune in with us and ask questions on the go. It is a platform with an open door for you to ask anything related to real estate and other subjects that we try to bring in every week for you. Today we have a pretty interesting subject that I haven't yet brought into the show. And
Hey guys, I'm not sure if I'm still live. You there, John? So if I am still live, today I think John was going to discuss the importance of life insurance. So we're going to go into a discussion on that. Let's see if we can get him back on. There you go.
issues here, my light flicked and it turned
There you go. Oh no. That's what you get when you're live and you're.
Absolutely. It's kind of awkward sometimes, right? But I'm glad you still went on to live. So I appreciate you hanging in there with me. And it's the first time that happened. So, I mean, it's okay.
Well, we are just, recovering from a big storm and still feeling the effects of it.
Absolutely. We were very fortunate up here in Cyprus, in my area. We only got a little bit of rain and maybe 28 miles per hour winds. It wasn't really that bad. But since you stayed on since the beginning, I wanted to introduce everybody. Celeste Valdez. Okay, she's here with us. She's my special guest. And say hello, Celeste. I'm sorry. She's with Celestial Living Life Insurance and Legacy Planning. And hey, what's going on, Celeste? You doing okay?
Yeah, I'm doing great. I'm so happy to be here with you. Thank you so much for having me join you today on your podcast. I'm super excited, pumped, ready to educate people on just the importance of life insurance and why you cannot go without it.
Yeah. And I appreciate having you here also. You coming to the show. And I every other week I try to do this, and I've been inviting most of my guests, and I'm looking forward to, if you know anybody that would be interested in joining and doing this in the next coming weeks, I'm always open for anybody that from your Sphere Event Network, okay? It's always great to bring more people, and I like big crowds. 2 weeks ago we had Mario, Alex, and Troy all the same time here, so it was pretty cool. I liked it.
I saw that. Yes, that was a very great topic and an awesome discussion there. So I really enjoyed watching that as well.
Yeah, and that subject that we were covering there is that they opened up the We Insured Around Town. They do insurance for homeowners. They do insurance for cars. And look, and this is a subject that I think a lot of people need to be aware of. Okay, so if everything that is tied into a lien, you're likely going to have to insure it. Okay, a car, a house. But people sort of forget to realize that their livelihood, their income, the budgets, the money that you carry at your home right? It's also sort of lean in your life. In other words, you got to continue
All of it.
working to be able to generate that income. So therefore, it is a lien in your own life, okay?
Yes,
and
all of it.
all of it, right? And
Yeah.
let me throw something at you, Celeste, real quick. So I've been doing a little bit of research, right? So it looks like only 54% of the American adult, okay, carries life insurance policy, any kind, okay?
Right. Right.
Honestly, I was surprised. I thought it would be a little bit less, to be honest with you.
Well,
So half of the country does not have life insurance.
yes, yes. And half of that actually is carried through a group policy. So most people have a group policy through their employer. So if you think about all of these self-employed entrepreneurs like you and I, a lot of real estate agents, all of those people, some of them might be blessed to have a policy through their spouse, through their through their spouse's employer. So the thing is that half of that percentage actually has a personal life insurance policy. So did it say there that, kind of split up the difference of if that was a personal policy or
Right.
a actual one through employment?
Good question there, because it does say that only 29% of that 54 are adults that are, I'm sorry, did I read it? No, I'm sorry, 27% of that 54% I just mentioned are in a group coverage, but they wish they had better coverage.
Right, right. And that's the thing, is that a lot of people might not even know what they have through their group policy. And to be honest with you, policy through an employer, that's not your own policy. It's a group policy, and there's a lot of risk involved in, if that is the only type of policy that you have. Since it's a group policy, there's a chance that, God forbid, you were to get sick. And let's say, there's a high percentage of people that, get cancer, and they develop cancer, and then that group policy can actually go up on you in price tremendously. And a lot of people just don't know about that. A lot of people don't sit down with you and educate you on what your group policy even entails. So it is great to have. It's just an icing on the cake that employers provide to their employees. But you're at a high risk if that's the only thing that you have.
Right. And I want to address this. This is quite important. I read this thing here and I thought it was real nice. I'm going to do a few quotes here and see if you relate to it a little bit. Okay.
Yeah.
This is actually written by Annette Wise. This is a very short portion, very first paragraph of it looked like a poem to herself, so to speak. Okay. She says, my future self and I become closer and closer as time goes by. I must admit that I neglected and ignored her until she punched me in the gut, grabbed me by the hair, and turned my butt around to introduce herself. So in other words, as she's growing and aging, she had introduced herself, future self, with a lot more problems that she would expected. Like you mentioned, you caught cancer, I don't know if that word caught, it means it's incorrect. You developed cancer in your body. And for any other incident, or sometimes
a stroke, a heart attack, these things we don't plan on experiencing, but we see people go through it every day. So not just death, but there's also living occurrences that can really take a toll on your life and your family's life, and really just change the whole trajectory of what you had in mind of your future being, and not being prepared for that.
Right.
Is it can be detrimental to your family.
It gets you at the wrong time, all the time. I mean, it's just, it's a beast on its own that you never know where it's there. It's a timing bomb is the right word I wanted to say.
A time bomb.
It's a
Yes.
time bomb, right? So
Ticking time bomb.
yeah, and the funny thing is that we're all used to the car insurance, and then the coverage there, it's going to cover the car, or if you injured somebody, the coverage for life on its own, it's very small, right? If you end up killing yourself, right? It covers the automobile, and it covers your liabilities if you cause harm to somebody else, and it covers your health bills if you injured yourself. But does a car insurance cover life? Would they pay out the wife that is without that income for the future? I don't think so. Do they?
Absolutely not. Absolutely not.
It doesn't.
And I know that you have a lot of agents, real estate agents that watch your podcast, and we know that one of the most and biggest investments in someone's life is their home.
Yeah.
And so we have to tell them about getting a protection, on their home, a home policy for a storm, or maybe an occurrence that happens to their home. But unfortunately, those policies also are not going to cover them in the event of death, or a developing a disability, or a health condition. And so we're conditioned to really protect ourselves against these storms. But wouldn't you say, one of the most horrific storm that could happen in your family's life is you not showing up at home one day,
It's death.
or today. We're not promised that we're going to actually go home to our family today.
Yeah, it's true. And as a realtor, I know this for sure, because I mean, there are days I drive 400 miles, and yet I have friends that go to work, like they work for a builder, and they got to get there at 9 or 10 o'clock or whatever, right? And then they stay there all day, and they drive back home, and they manage to crash their car and get into an accident. You know what I'm saying?
Yeah.
Could you imagine a realtor or a taxi driver or anybody that's out in the road driving at all times? You know what I mean? It to me is actually the most dangerous thing. You're putting yourself at risk every time you walk out of your door. And I've said that before in the show.
Yes, you are. You are. Unfortunately, we can't just stay in a bubble. And of course, we know in these times right now, it's just facts. More and more people are dying. More than we've witnessed before. And we have a deadly virus going on right now, and so it's important to really try to plan for it, and the unknown. Plan
Right.
for the unknown.
Yeah.
And it's very inexpensive, and just depending on what it is that you want to accomplish.
Yeah, and I think it's more a situation of lack of understanding. You know, like I said, I was surprised to see that 54% are covered, but then 27 of them are within the organization, which is actually a small, right? So they probably don't have another insurance company or not know to have another policy anywhere. But then again, it says here. 40% of insured who wish they had purchased their policies at a younger age. So 40% of the people wish they had purchased it younger, because that way you would have a large amount of coverage, right? It would cost less money in a way. And what are these terms go for? 20 years, 30 years, something like that, right? 10, 15, 20?
So there's three really big different types of policies, okay? And so we have our term policy, which is term. It's temporary, okay? Or I like to say it's a rented policy. It is very cost effective, and I think it's something that's great for an immediate solution, okay? So for something term, I mean, you're going to want to make sure that you have enough to pay off any of your debts, your mortgage. Most importantly, you're going to want to make sure that you have your income coming in for your family, depending on how many years that is for you. So that's going to be based off of maybe the children that you have in the home. How long is it going to be for them until they are able to start bringing in income themselves? Or do you have plans for your kids to go to school, and those expenses that you're going to have to that you would be paying on if you were here. And if the unexpected happens and you're not here, you want to make sure that you have those things covered. So future funeral costs, future college education for your kids. And as you mentioned, it is a lot cheaper the younger you are, and of course, the less of health conditions that you have developed, because of course as you get older, you might develop more health conditions, and that will make the cost of insurance go up.
Right. Let me throw in here a couple of things. Just two more quotes that I want to lay out. Okay. And I want people to kind of understand where we're coming from as we go here. Suze Orman, she said, I quote her, "If a child, a spouse, a life partner, or a parent depends on you and your income, you need life insurance."
Absolutely.
And then Farshad Asi said, "I don't call it life insurance. I call it love insurance. We buy it because we want to leave a legacy for those we love." How beautiful is that one? Huh?
Yes, that's beautiful, and that is the honest truth. And it's funny because I love that she says leaving a legacy. Okay, well, as I mentioned, a term policy that's going to be more temporary, and more a rented policy, more for the immediate solution. But there are several people that use their life insurance policies to even build legacies, even use it as supplemental retirement accounts.
Right.
Because when you're looking at the other two types of policies, you have a whole life policy and also a universal life policy. Okay, so you have a whole life policy, that's a permanent life insurance policy that could be a little bit more costly, but it remains the same price throughout throughout your lifetime. So it could be up to 100 years, 120 years, but you're also gaining cash value. Okay, so and those policies, you can actually have something locked into the contract for maybe 2-3% in cash value. So not only do you have the aspect of the protection, the life insurance, that if something were to happen to you tomorrow, your family's going to be very well taken care of, but you're also putting in money, and as kind of a savings, getting some extra, income, or, and really, if you're putting your money into a savings account, what are you gaining on that? Really, you're right now, what kind of return does that have?
Yeah, they say, why do you save cash when they keep on printing every day?
Right. Or if it's not sitting there, it's not growing, and if anything, you're losing the value. You're actually not gaining anything.
Yeah, nothing. Actually, as a matter of fact, the money that sits in your checking account or savings account, it actually lose value with times.
You lose
They
value.
lose value. And
Yes.
most people don't realize that, and that's, and I think it's more part of education, and now we are, we are so diverse on social media, so diverse with all these outlets that we have available for information, but yet there is a huge percentage of the population who does not have access to it. They don't watch TVs, they don't own a computer, all they have is their phone, but they tend to follow what they're interested in. What I'm saying? If you don't have a Celeste, if you don't have John, if you don't have somebody that's, putting that seed in your brain, they will never know about it. Some people would just go their life without no life insurance, at all, which is fine if everything worked out at the end. But I'm pretty sure that you would have rather leave your loved ones well taken care of before
Or
you die.
even wealthy. I mean, it could be
Or
used,
wealthy in some cases.
yeah, it could be used as a tool for generational wealth.
Yeah,
And
there you
if you
go.
think about the wealthy people, they are actually the ones that are using these types of policies to build for their future generations.
That's
And
a
so
really strong word. I like that.
yes, yes,
Generational wealth. I love that.
generational wealth. And you're right, we aren't educated on this. And at one point, I wasn't educated on it, to be
Yeah,
honest with you.
me too.
I had became very successful, and blessed. And nobody sat down with me, even whenever you go and get hired on with the company, how many people are really sitting down with you? The HR person sits down with you and goes over your 401k with you and how that really works, where your money is being invested in. A lot of people don't actually even
Nobody. Yeah, nobody. Over here in this house, we go after Alex.
you
Alex,
guys
you tell me, man, what number?
yes. Yes, and I've also been very lucky to have him and the Zendays in my life, in my inner circle. And
Right?
unless you are presented with maybe people like that are gonna actually sit down with you and care enough about you to go over some of these things with you,
Right.
you don't know what you don't know.
And that's the thing too, what I, to put the finger on the wound here, I think a lot of people, it puts a lot of strain in themselves financially. They push their limits. And then whenever a life insurance agent shows up and say, hey, look, man, you need life insurance in your life, they think you're like just a salesperson trying to get that in their head and have them pay something. But problem is that they probably don't have that extra $50 a month or $30 a month because they're pushing themselves thin. I see that a whole lot, what I'm saying? But then again, there are people that do have the extra income to pay for life insurance policy, and they just think we're trying to sell you something and make money. No, sure. Every career, every agent, including myself, of course there is the money part, but within that money part, it lies our passion into serving. You know what I mean? And if you're dealing with life insurance policy, you need to have empathy. You need to have the desire to protect that person's future life, future person.
Yes,
Just like Anne Wise said, future self. That's what she said, right?
And I'm so grateful that you brought me on here, because really this is more so for an educational purpose. Educational purpose to really spread and oh, by the way, it is Life Insurance Awareness Month. So did you even know that?
I didn't even know that. See that? I didn't even know that. You know what? I'm so, things that you probably don't know about me. I'm so in tune with the universe. It's ridiculous. Like things that I do is always connected. I have a very good instinct with these things.
Well, I see that now, because yes, John, you just happen to know that it's realize it's Life Insurance Awareness Month. How did you know that?
Yeah. Very good.
Right?
Very
So
good. High five to that. Let
yeah,
me just go over a couple of things again. So you mentioned term life insurance, whole life, universal life, and there are more life insurance, right? But what would you say your recommendation? Like, if anybody is going to research for life insurance, what do you think is the strongest, the most beneficial? Because there are life insurance that don't leave any benefits afterwards too, right? And you got to know the difference between all of those. What do you recommend?
if I'm going to be honest with you, there is not a one size fits all. Okay. And that's why it's important that you really sit down with a life agent who is going to really, assess what your needs are, what your family's needs are, because, it's really going to be based on your age, the point of life that you're looking at. So if we're talking about let's say a couple that's in their 30s, maybe 35 years old, and they're purchasing a home, and let's say their home is worth, $200,000, I would say immediate solution is definitely going to be something to make sure that that home is covered. Make sure you at least have enough you just made a huge investment, and that's one of the most important investments of your life, and you want to make sure, because typically you have a scenario where maybe you have one of the spouses making about 20% of the income to cover that house, and then the other percentage 80%. So you want to make sure that, ask yourself, if I did not show up today at home to my family, what would I want to happen for them? What
And
would
that's
I
my
want to be paid off?
and that's my next question there. I think I can tie it into it, right? Just to figure it out. Most people probably ask the question, how much do I really need? What's the amount of coverage should I get, right? And then what I've learned, and you can correct me if I'm wrong. So most of the life insurance agents that I've spoken in the past has said you kind of want to set it up where you're at least minimum 10 times your income.
Yes.
Does it make sense?
Sometimes your income, or also, how long are you going to need that income to sustain your family for how many years?
Does your wife work? Does she not work? Right? Those things.
Right. So that's to say there's not really a one size fits all. But if we're looking at somebody, who is just purchased a home, who is, maybe in their 30s, they might want to at least have a term policy for the at least a 30-year, if they have a 30-year mortgage, have a 30-year term life policy that's going to cover that home. Now, what's really awesome about life insurance today is that it's evolved so much. Okay. Right now there's actually products that will give you either a return of premium or cash back, to where, if you're like, I want a term policy, I'm not sure if I want to go into something permanent right now, at least you can actually start putting money, and have the coverage, but know that that money is going to be returned back to you in 30 years. So, or 10 or 20, just depending on what you want, or how soon you want to get that cash back, and what you're going to do with that cash. You could use that cash back. I'll give you an example.
Purchase a home.
Or to pay off your home, or to, I just worked with a couple the other day who was in their 30s, and they just purchased their home. It's $200,000, and they each got a policy to make sure that that was going to be paid off in the event that something happened to one of them, and God willing, that they actually outlive, because there is a big percentage, about 98% of people are going to outlive their term policy. So you
can always renew and implement new ones, right?
Right, you can always renew, but at that point, at least they're going to get money back. So they're going to get about $50,000 back at the end of that term. And if they wanted to use that towards And that's each. So that together combined is $100,000.
All right, so a couple of trick questions here, right? So, one thing that I ran into a little bit, I got into racing cars. You probably already know, right? So, me and a group of friends that you're familiar with, and I wanted to renew my insurance policy. I have one for myself, one for my wife, and then as soon as my kids become 18 years old, I'll probably put on theirs. Actually, you can do it earlier too, right? But
yes, at the age of 0.
Yeah, age of 0, you can put an insurance policy on your children. Okay, so that's pretty cool too. But either way, is there a way around? I don't want to lie to a life insurance policy and say, hey, I don't drive 7-8 times a year at a high speed in a track with a car that's can break at any time, and you know what I mean? So how do you go around that situation, if there's any way, without lying?
Yeah, I mean, so are you asking as far as coverage goes, like who is going to give you that coverage?
Yeah, is there a policy, or would it be more expensive if I were to say, declare, look, I like skydiving and I do it often. I race cars and I do it often. I drive motorcycles in the track, but I do it often. And I know that in some extent, those people do get a problem with insurances, don't they?
With getting approved. Yes. And you can get approved. There are policies out there, and they are going to be a little bit more expensive. But if you're willing to pay the price to do all of those fun, amazing things, then put yourself at a high risk, then you're going to have to pay the price. And
you pay the price for it. What about?
So, and that's also one thing that I wanted to share with you all, is that I'm actually a broker. Okay, so it's also important to work with someone who is non-captive, meaning, that way you have options. Okay, so you're not just going to somebody who has Allstate or State Farm. They can only give you the option of going through their carrier. So being able to shop around to give you the best, not only the best price and coverage, but you mentioned the fact that you like to race, and you like to do all of these high risk things. But what if you are somebody who already has, diabetes, or who's already had a stroke, or already
I was going to ask pre-existing conditions, right?
Yeah, if you already have these pre-existing conditions, it's important that you get with somebody who's going to be able to shop around for a carrier who's actually going to approve you, because, you might get denied with one carrier, but you might have another carrier who's going to be a little bit more liberal to those situations. So really, to be able to get with someone who has options available for you.
Right, and the prices, pre-existing conditions, the prices do reflect on that as well. If I'm not mistaken.
That again brings us back to the point of why that percentage of people wish that they would have gotten into a policy sooner versus later.
Right. Because in reference to, let's say you did get it earlier in your life, and you have a whole life insurance policy, right? And if you end up having a illness in the future, you're covered. They can't deny you coverage because you're already in that policy, right?
And there's some term policies that will have a conversion to where, if you were to develop something like that, then you will automatically get approved. So those are the little things that, there's a lot of little riders as well that might cost you just a little bit more, but that are important, so if you wanted to get a rider that, is a conversion that'll convert you into something permanent, or, that way, if you develop anything, that insurance company cannot deny you anymore. So there's those aspects as well. And also the fact that, I know we touched on children and getting children insured. Well, That's also another great point in as far as starting off your children early. One, if you're going to start your children off, I'd say definitely looking into a whole life policy. And there's also something called an index universal life policy. And those can actually be used to, one, save money, but also have that protection. And then they're able to, you know, be approved no matter what they developed. When they become an adult, they take over that policy and are able to keep it and transfer it over as, you know, when they become adult and they take over the policy.
Right. So you've been paying it ahead for them. So they, does these whole life insurance policies carry annuities and such, or no?
I'm sorry, what was that? Do carry a?
Does the whole life insurance policies you pay for your children, do they have annuity options on it?
You know what, I have to get back to you on that. I'm not sure if there's any children annuities, but
Okay.
there are, you know, savings that are attached. So you can definitely, you know, use that cash value in the future for maybe their education or books. You can also an index universal life policy. That's going to be something that actually mirrors the market. So it actually can start them off with something that mirrors the market that's actually going to grow. So that is going to be huge for a child, start them off in, and something that's going to let them grow, you know, income maybe for their future. And they can start taking money out of it and, you know, use it for whatever, to buy their house, their first home, to start their first business, to, you know, go to college. So it's very important. And those are the things, the legacy aspects of life insurance that a lot of people don't know.
Yeah, right. Look here. The top reasons for buying life insurance in the U.S. are 84% burial, final expenses, 66%, and that's huge because honestly, not a lot of people want to be cremated, right? And I watch it, I watch it all the time on TV or news and such. I mean, these people do come, the funeral come to your house, laying out a flyer of coffins, and they start off $5,000, if not more already. You know what I mean? And that's just
I mean, it's very costly. Yeah, for a funeral burial, you're looking at, you know, 20, even close to $40,000 nowadays, and the price just keeps going up.
Right, it does. Everything keeps on going up, and then 66% is wealth transfer, which is definitely the one that I do want to encourage to everybody. Just don't leave your loved ones without anything, because especially if you're like self-employed and the business depends on you to be carried forward, or you're an employee and your wife ain't going to take the job. You know what I'm saying? She might take over the business, but she can't take the job. You're like a chemist for Exxon, you make a ton of money, but never had life insurance. Could you imagine what happens to that family that's earning $500,000 a year and all of a sudden it's zero? I mean, how long?
It happens.
Right. So 62% income replacement, 57% supplement retirement income, which is pretty interesting too. And that's why I asked for the children. Hey, I'll start them early.
And let me bring up another point about that. And a lot of people do it because of the tax codes. Okay, so there are tax advantage points because your beneficiary is going to get this money back tax free. So these are tax advantages.
Absolutely. Look at
these types of policies. Yes.
That's a very good point there, because 50% pay off their mortgage. That's what they're looking for. Could you imagine you being able to pay off your mortgage tax free? You know what I mean? It just, you use all that bulk of cash. Wait until you inherit money from a family member. See what happens with you. You pay taxes on that. You know what I'm saying?
Or even, when you go to retirement, when you retire, how much are our taxes going to be at that point?
Yeah.
Uncle Sam is not taking breaks on us, guys.
Right, right. And Celeste, let me ask you a little bit about you again here. And you mentioned your title says, you're celestial living life insurance, but you're also legacy planning. What does that entail as far as legacy planning?
Well, I mean, obviously, I think we've covered a lot of that
Yeah,
already. Yes, as far
we
as setting up, preparing for, maybe yourself as a supplemental retirement policy. Let's look at our options there, or the options for setting your kids up for their legacy and the legacy that they're going to leave behind. I mean, it's just building something enough to where your family is going to not be left behind in debt. That's going to, they're going to remember you forever, your legacy. Some people like to read books, to write books, and that could be a legacy that you're leaving behind, right? But I mean, leaving behind a legacy of wealth, of education, teaching our future generations of not only how to set up these plans and prepare for the unexpected, but have wealth behind them, and building money, and not only growing money, but keeping it. How do we keep it? How do we keep it in the family and not just blow it all and spend it all to where it only lasts for 1 or 2 generations? Because that's also something that is taught. You have to educate yourself, educate your family on that, and leaving a legacy.
Yeah, absolutely. And we see a lot of times, we see it happening most of the time. New money. New money does cause some issues with families. They don't know how to manage it. They often fight, with one another because of it. And that's for lack of planning, lack of education. Those things that you need to consider. You need to consider for yourselves, for your kids, to have a better plan for the legacy, your future self that you're living out there, and no other way to also including life insurance plan in your life. And then again, we're here not to sell you any products. I don't want you to call me. I want you to call Celeste here, maybe, if you have any questions and you'd like to go into life insurance coverages. But we're here to educate you, open your eyes, that a lot of you have maybe been asked about life insurance before, and your answer was probably, I don't know if I should get that. That's probably money thrown away because, I'm never going to see this money. Well, that's the typical answer there, right, Celeste? I mean,
It is.
And look, like this other guy said, it's love insurance. You don't want to leave your kids and your wife, any loved ones, your partner, whatever it is, without that income that you're generating. And life can take a turn dramatically, and sometimes very difficult to recover. Your house being the number one thing I think that you need to be covering and making sure it's paid off for the kids and for the wife. Life insurance would do it if you can't do it any other way.
Yeah, and and like the thing about is that even your mortgage company, even the banks, they have a policy that in the event that you die,
Yeah,
they're actually covering themselves.
absolutely.
And that's something that most people have to pay for. It's not a choice. So even your bank, your mortgage company, they're actually have a protection in the event that you die. So
Yeah,
and where they actually are the beneficiary,
that's a
they're
great
the
point.
ones. I mean, they're the ones that are going to be paid off
That's a
in
great
the
point.
event.
That's a great, yeah, yeah, yeah.
So why wouldn't you have it on yourself to
Great
where
point.
you are the beneficiary?
I
And
agree.
so I do have a lot of products as well for the a mortgage series protection. where it is actually transferable. So if you move to another home, it's not one of the policies that the mortgage company is going to try to sell to you that makes them the beneficiary. And, in the event that you move, it's not transferable, or it's even a decreasing policy to where you're still paying the same amount monthly and your coverage is decreasing. So that's why I think it's very important that you actually sit down with and it doesn't have to be me, I would love to help people, but really this is for educational purposes. I mean, I'd love to help anyone and everyone, and I am here to help, but make sure you sit down with anyone a life insurance agent who is very familiar with all of the products and all of the options. Make sure they have options for you to make sure that they're putting you in the right type of policy.
There you go, everybody. That's Celeste for you here with Celestial Living, Life Insurance, and Legacy Planning. Celeste, what I'm going to do is put your website on my description, both on Facebook and YouTube. So if anybody wants to reach out to you, they can by using that link there. And it's such a pleasure to have you on. I want to take you to the next segment. I think you're going to appreciate this. And if you want to go after that, you can, Celeste. But I want to go over.
Awesome.
Have you seen this book before?
Yes, it's actually on my desk right now. It's one of
You have this book. Okay, that is awesome. Okay, so if you are in sales or you do negotiations, okay, so this is a former FBI top hostage negotiator, few tested tools for talking anyone into or out of just about anything. So he said he wrote the book Never Split the Difference by Chris Voss, negotiating as if your life depends on it. And I really enjoy this book, particularly because I'm in sales, and every once in a while I have to talk to a listing agent or a buyer's agent and negotiate on behalf of my clients. And I want to have all the tools that are available for me to accomplish that goal and better protect my client's interests. So I've highlighted a couple of things over here that I really thought it was right in the beginning of the book because I didn't want to spoil it. But there's a couple of things that I usually do this, Celeste, every week. I kind of try to read one sentence or quote something in the book, and and people have appreciated that. Thank you. Okay, so it says here, one, separate the person, the emotion from the problem. 2, don't get wrapped up in the other side's position, what they are asking for, basically, but instead focus on their interests, why they're asking for it, so that you can find what they really want. 3, work, compare. Sometimes I mess up with words, Celeste. Or I don't understand them at all. But comparatively,
hey, we're all learning.
Yeah, that's true. I think I did it right. Comparatively, to generate win-win options, and 4, establish mutually agreed upon standards for evaluating those possible solutions. And then here's another one, and then to end the book today by Chris Voss. Have tactical empathy. This is listening as a martial art, balancing the subtle behavior of emotional intelligence and the assertive skills of influence to gain access to mind of another person. Wow, I love this. I love this.
That's
it's a great
powerful.
book. Very good book. So you have it, Celeste.
I do.
Cool.
I have not started reading it yet, but I did get it from Amazon, shipped to me actually this past week.
Yeah, very easy. Yeah,
it is definitely on my list of books to read.
It's a great read. It's a great read. I like it so far. I have maybe 20 pages left. I haven't finished yet. And I have it for a while now. It's just that I've been trying to catch up with the books I got here, man. You know, I'm not one of those people that can read like 3-4 books at the same time. Hell no, I can't do that.
What do they say? I mean, how do you eat an elephant?
How do you eat an elephant? Oh my God, you first kill it. Then, I mean, seriously, you can do that atrocity. I mean, that's
one
the first
bite at a time. So, you just take one bite at a time, and then you'll eat that elephant. So just
Okay.
one page at a time for a book, and that's what you got to do. Just one
That's right.
page at a time.
That's right. No, and I usually take notes and I put aside and I kind of resonate on those notes, you know what I'm saying, for a little bit. Then I get back to it. Sometimes, I feel like sometimes if I were to read the entire book, I have at one point or the other, there is something in the beginning that I kind of like ran away from or forgot about it. You know what I'm saying? That's why you gotta take notes. You gotta leave the most important things in there so you can go back to it. That's how I do it. So.
Yes, that's very smart.
Yeah, but very good. Celeste, it's very nice to have you here. And I appreciate the support. Like always, I'm asking everybody that if you like the show, please log into my YouTube channel. I'm going to have a link there for you on Facebook, where you can go and subscribe for my channel and put a like there for me and put some comment, a thumbs up, thumbs down, some criticism. Doesn't matter. Just lay it out to me where I try to make it better, try to make it better for everybody. But Celeste, thank you so much for coming to today's show. And I'm going to leave you now.
Thank you so much for having me.
I'm going to leave you now. I'm just going to go with one more thing afterwards, but I'm going to say goodbye to you so that I don't bore you with some rules change on track. I have another 10 minutes to go. Lovely to have you. Thank you so much.
Thank you. Thank you for having me, John.
Thank you, Celeste. Thank you. There you are, everybody. Yes, thank you for being patient right in the beginning. We had a little bit of an issue, technical issue. My light flicked and it turned off my computer, but thankfully my computer was really quick to turn it on, first time ever. And then the live continued because there was someone else already in there. That was great. What if I was by myself, I probably would have to go back and restart the whole thing. So thanks for your patience there, guys. But anyway, so I have one more segment for the day, and I want to share a couple of things with you. TREC has recently changed some rules in the contract here for real estate, and isn't Celeste great? She's so smart, guys. Listen, give her a call, find out how you can get a hold of her, and then talk about life insurance. You guys should really think about that. It's important for you, okay? I wouldn't bring it here unless I didn't think it was, okay? But yeah, thank you so much, Celeste, one more time. But anyways, TREC has revised their contract. When does rules change? Well, they change when it failed for the first time, right? Or they see where there was a potential for improvement on those rules for the better of the consumer into the real estate industry. Okay, so I'm going to go ahead and share a screen with you. I have only 8 minutes left. I'll be freaking quick here for you, super quick. Let me see, how do I do this? Let me open it up all the way because that way I can see it. There you are. Share a screen, and hopefully I don't have a problem in sharing like I did last time, right? Last time I did have a problem. There you go. Let's see here. Share. I clicked the share button. It looks like it's sharing. Guys, can you see this contract? Okay, so let's see here this contract. Something happened to my, let me reload this page real quick. There you go. There you go. Okay, so this is the 1-4 family residential contract, okay, used for resale homes. Okay, so if you're buying a resale, you're using, and it's a 1-4 units, you're using this contract, okay, here in the state of Texas. Anyways, unless of course you have a contract written by your attorneys, which I don't recommend. But anyways, here's the recent changes that we have to look at. Starting September 1st, okay, they've changed section. What is this? What is this? Section 6, paragraph 7, or E7 for title notices. Okay, so you can see here where they strike in red what previously had red there. Now says public improvement district. If the property is in a public improvement district, seller must give buyer written notice as required by 5.014 property code. An addendum containing the required notice shall be attached to this contract. Okay, so apparently somebody sold a home in a public improvement district, and then there were improvements being done, and it raised the taxes or fees and assessments were charged to the new buyer of the home. And then likely that buyer didn't know this was happening, right? And didn't know about it because the realtor never mentioned it. And they likely incurred a debt and they sued the realtor, likely, for sure. Somebody got sued in this thing. Now they're implementing where you need to have this addendum if you are in a public improvement district. But here's the problem. Here's the problem. I have no idea, and I've been digging around here, man. I have no idea. Somehow I messed up. If Medi can help me with this, I can't find it where this is a public improvement district or not, where it says PID on it and the name of it. Look at here. I hope you can see this. This is the addendum. Look at here. You got to insert. And this, of course, you can discover these things, right? But the title company can't help you. My tools as a real estate agent hardly ever show this. Look, public improvement district, government code, or chapter 382, local government code. I'm sure we can find this. Insert subchapter A, chapter 3372. Gosh, these realtors are not going to want to know how to fill this out. We're going to have trouble with this. Where do we find this information that is easy, obtainable by their agents? That's what I want to know by you, TREC, and I want to know by, and then maybe of you, some of you listening up is like, but if you don't know this, man, you've been 20 years a real estate agent, how do you don't know how to get that? Gosh, man, I never had to find this information and put on a damn form, okay? So forgive me. Yeah, I'm just thinking, and my broker wants me to put it up in every contract, just in case. What do? Leave these things in blank? Oh, I can't do that. So yeah. So guys, be aware, agents, if you're listening up, you are now with the change contract by September 1st. All contracts must be this version over here. And you might have to consider checking if you're going to need to click on this new box right here. It says addendum containing notice obligation to pay improvement district assessments. It's big. Forget about it. You forget about it, or you didn't know about it, and then your clients eventually will be harmed by having to pay improvements in that district. You never told them. That could be a problem for you. So yeah, find out with your broker the best way possible for you to handle this form. As of right now, I think it's only here in Texas. So I'm not sure if they're implementing, if other states already have it, or will they implement this in the future. Yeah, there you go, guys. There you go. So anybody that have any questions about this, reach out to me. I am right now trying to get a little bit more information to be a little bit more educational on this, and for you probably on the next show, I will do an update of this and what I found out about this new requirement. Okay, started right now, 15 days ago, September 1st. But anyways, guys, this is it for the show. I must say that next week I won't be in town. So Wednesday of next week, I think, is the 23rd or the 22nd, if I'm not mistaken. The 22nd, yes, I won't have a video. No live, guys. I will be out of town on a training so that I can bring more value to you guys. So I won't be able to do a live. Maybe I'll do a little sneak peek to what I'm doing, and that will be cool, right? Maybe I'll do that if you're listening all the way to the end of the show. Again, thank you so much for your support. It's always going to be a nice compliment to me if you go on my YouTube channel and you subscribe for updates of every week and additional special shows that I might be doing it for you and for everyone else. And I appreciate your comments. If you have any positive or negative, I would like to hear it. Okay, say yes, I like it, or no, I thumbs down, you don't. And let me know why you don't. Okay, but it is very important for you to support me, and I appreciate it so much. And again, one more show. I hope everything went really good today. I'm trying to find. Oh, I'm still sharing the videos. Oh my God, yeah, I was still sharing the screen and I was talking to you. But yeah, thank you so much. Tomorrow I do get a haircut. Yeah, I do need a haircut tomorrow. Yes, and I'll get there. Peter, I'm coming. I'm coming. Thank you so much for tuning in. I appreciate you and have a great one.